Hello, everybody. Hello. Welcome to This Week in Venture Capital, Episode 2. Sorry, my head's getting chopped off here. We're going to have to just correct a little bit of the video. Mark Suster's back. Week 2. Everybody loved Week 1. What was the feedback you got?
I got a lot of really positive feedback.
Yes.
I think people like to know about deals going on and
Yeah.
just general chat about what's happening in the market.
And it seems like we did it in an almost reasonable amount of time.
Yep.
50 minutes, I think.
Yeah.
It's 2:09 Pacific time right now, and that means at 3 p.m. we have This Week in Cloud Computing,
Okay.
which is a great show here on the thisweekin.com network,
Yep.
which is crushing it. So we want to get this done in under 50 minutes, preferably 40, and I think that's the right amount of time for people driving or maybe at the gym or at the poker table. So let's get right into it. Let's not waste any time. We decided we're going to do a deal of the week. What is the deal of the week, Mark?
I think the deal of the week this week is really TweetUp. And the reason I think it's super interesting, let's start with the basics. It's Bill Gross.
Yeah.
Bill Gross, for those who don't know, founded Overture, which was GoTo.com initially. And Bill Gross also ran Idea Lab. And what's interesting about Bill Gross is he's the guy who came up with the concept of sponsored search.
Correct.
Of paid search results. And initially Google said that they weren't interested in doing that. So he really kind of got out in front. And I view this as, in a way, GoTo.com version 2. The other thing that's really interesting to me is if you look at who the investors are, it's
Yes.
platinum status. Danny Reimer from Index Ventures,
Big
who's
deal.
got the golden touch, the Midas touch, and he's going to be on the board.
Right.
On top of that, you've got Steve Case involved, founder of AOL.
Big deal.
Yeah. Howard Morgan, first round capital.
Who was on the show This Week in Startups?
BetaWorks, and this
John
guy.
Borthwick?
Yeah, and this guy, Jason Calacanis.
Interesting. Yes, I did invest in this. I can give a little backstory to it, actually.
Right.
I get an email from Bill Gross around December
Yep.
or January, and I go, oh my God, Bill Gross emailed me. I've known him for a long time. I covered him when I was a journalist. He's been a hero of mine. And he says, I have an idea that you inspired. I need to talk to you about. I'm like, my God, I'm inspiring Bill Gross. This is great. So I talked to him. He says, listen, I want you to be CEO of this new company. It's going to be an ad network. It's Overture for this. And I said, wow, that's a brilliant idea. How'd you come up with it? He goes, remember you offered $250,000 to be on the suggested user list? I don't know if you were serious or not, but at the D conference a couple years ago, we talked about that. I'm making a company based on that premise and my last idea, Overture. So truth be told, he was being very gracious, saying I inspired it. Overture is clearly the inspiration for this. I said, I'm loving my job at Mahalo. I'm not going to give that up. It's, doing fantastic. But I'm really interested in the idea, so let's continue talking. He said, would you angel invest in it? And I'm like, pinch me. Would I angel invest in Bill Gross's next company that he's going to be CEO of?
Yeah.
Of course. And then, I get the email. It's like Ron Conway, Steve Case,
Yeah.
Danny Reimer, and I'm just like pinching myself. Like, am I really even on this CC list as an angel investor? I only started angel investing 6 months ago.
Yeah.
And it's, there's only like 1 or 2 angel slots open. Anyway, long story short, I think it's a great idea,
Yep.
and I think that there's a little misunderstanding in the marketplace as to exactly what his idea is versus the Twitter ad network that's launched or the Twitter search ads.
Yeah.
And there'll be a place for both.
Yep.
And I think his will be the ad network that's the independent one across the social stream.
Yeah.
Forget about that, it's called TweetUp. Let's just say updates
Yeah.
for the social stream. So he'll be that, and he'll have his own social search, Twitter search, Facebook search perhaps. I don't want to speak for what features are going to do next, but it would follow that if you wanted followers on Twitter or followers on Facebook in an ad network format, you might not care if you're getting people to subscribe to your Blippy network on Facebook or your Facebook fan page on Twitter.
Yeah.
You could run across those things. So I think what he's really building is AdSense for people.
Right.
So it's really PeopleSense is what I think he's building.
Okay.
But it's Bill Gross. He's going to iterate. He's going to figure it out. And I don't think it's going to be much of a problem that there is also a Twitter, homegrown ad network.
Yeah.
There are many ad networks out there, and some people run Google AdWords, AdSense. Some people run Yahoo Publisher Network. Some people run all the different ad networks out there.
Can I offer some critique?
Yes, of course. Let's hear it.
So, look, I'm going to start with the basics, which is I consider Bill Gross the Jeff Bezos of Los Angeles. I mean, I think he's really one of the smartest thinkers about the internet, and not just the internet, entrepreneurship, and really change, because he's involved with eSolar and doing a lot of deep thinking. I mean, Caltech graduate. So I would never bet against Bill Gross, nor would I bet against people like Danny Reimer, who at Index has a fantastic track record, and obviously I love the guys at First Round Capital.
Well, you brought up Danny Reimer from Index and his track record. Just for the audience, What are the highlights there?
Well, I mean, I guess he's initially was known for Skype.
Right.
So involved in Skype, involved with MySQL.
Right.
And made a lot of intelligent picks. He's got a couple other big ones, don't come to me at the top of the head, but he's got like 4 or 5 pretty big home runs. And he was considered, I mean, he came out of nowhere from 10 years ago.
Right.
I mean, he comes from an established family, but 10 years ago, no one, when I lived in Europe, no one was talking about Index. And suddenly, not only everyone in Europe.
Last FM was a big one, obviously.
Last FM,
big
exactly.
exit, yeah.
And also
and
in the U.S., people consider him in the top tier. And even in Southern California, he came and did one of the better deals in Southern California, which is Right Scale, based out of Santa Barbara.
Yep.
And he's doing that deal.
And you said he came from another family. What's the family?
Well, I mean, I think his family, if I understand it correctly, they're from Switzerland, in Geneva, from a well-established family. He's not just kind of, he's not you, scrappy kid done well, right?
Star Doll, he's in, which is doing really well, Sequoia Company. OpenX, Sonos he just did, which I love, which I think is going to be awesome for him. They'll probably go public. Net Vibes, which I think did moderately.
Yeah.
So what are your problems or concerns or challenges?
Let's start with the basics. Number one, horrible name.
TweetUp, horrible name, why?
2 reasons. One is TweetUp means something totally different, right? So they can try to co-opt it, and if they're successful, of course, they'll co-opt the name.
And TweetUp means?
It's a meetup. Like, you know, let's have a tweet up. I'm in town.
Yep.
Let's have, I think it's a dumb name for a meetup anyway, but that's what he's done. And the other problem is you've painted yourself in a corner. I always tell people the golden rule of branding. Number 1, choose a name that is your URL. You don't want those things to be out of sync. And number 2, don't choose anything that paints you in a corner. With the word tweet in it, it's painted into a corner. Here's my prediction. My prediction is it's not called TweetUp within 18 months. It's called something different.
Okay.
What I also would be concerned about is why did GoTo.com not succeed? It succeeded, and they got a $1.6 billion exit, plus they got a big settlement on patent disputes from Google. But what Google did is they had organic traffic coming to Google.com, and then they had this affiliate network, which was AdSense. So they had AdWords and AdSense.
Which they bought. They didn't.
Yeah, they bought Applied Semantics, a Los Angeles-based company founded by the El Boz brothers and a couple of other people. But what ultimately hurt them, I believe, is they didn't have an organic place to do search. And in fact, when they went and did all those affiliate deals, everyone said, we'll do the deal with you, provided that you don't have organic search that competes with us. When Google started the business, they already had a huge franchise on Google.com.
Right.
What that allowed them to do was to undercut price on GoTo or Overture globally.
Right.
Every big deal. They would go in and they'd take a long-term view, 5-year, 10-year view, because they had this money machine called Google.com. And if you think about a Twitter-based network like this, they're going to have the same problem because Twitter itself is going to monetize enormously through their search and through paid ads.
Right.
And that will have a cost advantage through the distributed model. No question, Twitter's going to take this to all of the Twitter clients and other applications eventually. So I think that's where the concern will come long term. But again, I wouldn't bet against Bill Gross. And I think it will be called something different and it will be multi-stream.
I agree with much of what you said. But when you are investing, of course, you're investing in the jockey, the race, the horse, all these different things.
Yeah.
And the jockey is Bill Gross.
Yeah.
And the race is social advertising.
Yeah.
And the horse, we can change horses midstream, no problem.
Yeah.
So I think it's the right jockey in the right race. We'll figure out.
I think it's a sensible investment on that basis.
Yes. And so I think, please God, let it be a failure at a $2 billion exit at the valuation I invested in.
But it's nice, Jason, is
he's a couple of 100x. So
I think he's still out. He's still out to prove that he was the guy who created the model, which has created all the monetization. And at GRP, we love to say we invested in him. We did invest in Overture, but it was really Bill Gross. And I still think, and it's nice to have someone with a chip on their shoulder, isn't it?
Oh, yes. Something to prove is always good, and somebody who's hungry, and somebody with a track record. These are all good things when you're investing.
Yep.
Want to just let people know, we've launched an IRC channel, irc.thisweekend.com. If you don't know how to use an IRC channel, you can go to something like Mibbit, which is MIBBIT, and you're going to join irc.thisweekend.com, and we're in the Pound Venture Capital room. We're going to keep this room open 365 days a year, and I notice there's a dozen people hanging out in all the time. So this will be a persistent place for the community to hang out in. Sure, you could be in the IRC, you could be in the chat room on Justin TV, you could be in the chat room on Ustream TV, but for the whole This Weekend network, it's an exciting announcement. We have pound venture capital, pound startups, pound Android, pound iPad, because we're thinking about doing an iPad show. Wow, totally unprofessional for me to have my phone and forget to turn it off, but it is the internet. So anyway, just remember that we have an IRC chat room, and let's go on to the next story.
Yeah, so I mean, I think a very related story is the acquisition by Twitter of the product Tweety.
Huge
news. And obviously,
so this is our M&A deal of the week?
Yes. And if you think about this deal in particular and why it's related, and obviously the fact that Twitter's announced their own ad platform, is Twitter very clearly is thinking about monetization, as they should be. And what they've done is they've made a move upstream, because if you think about tweets themselves, they are consumed at twitter.com, but they're consumed on TweetDeck and Seismic and
I would guess they're
Uber
consumed
Twitter
on the clients more than they are Twitter's website.
I would guess so as well.
Where do you consume most?
On the web. So there's two.
So you do use twitter.com?
So there's two things I use the most, twitter.com and Uber Twitter on my BlackBerry.
Yes.
Yeah.
And have you downloaded the Twitter BlackBerry client?
Not yet.
It's pretty dope.
Yeah.
So in the same week, they launch Twitter Berry.
Yeah.
I'm not Twitter Berry.
They're Twitter for
native
BlackBerry.
Twitter for, and you know that's going to be installed default on every BlackBerry.
Of course.
So they've just basically destroyed the other two, Uberberry and Twitterberry and all those things. They don't have a life anymore as a business. I don't believe.
So what my argument was, let's talk about Seismic, because I think those are like the more substantive companies, Seismic and TweetDeck.
Yes.
And I've said all along, so I said on record in September of last year, debating Guy Kawasaki on camera, that I thought Twitter would buy Seismic eventually.
Yes.
And my rationale was, you've got to move upstream where people consume it, because that's where the ads are going to go, right?
Yep.
So I always thought that they needed to do that. And I think Loic knew that. And what I think he's really focused on is being a multi-stream platform. So the question is...
When you say multi-stream, you mean?
So aggregating your Twitter feed and your Facebook feed. And
perhaps others.
IM, for example. Sure. And I've talked about a product that I use for IM aggregation called Digsby. And they've now built in a Twitter client.
Is that an investment or just something you're interested in?
No. I'm passionate about the product.
Just so people know, whenever we have an investment or an interest in something, we're going to disclose it.
I will always disclose it.
It just came up in the Twitter chatter.
And so I just want to say that I think it was a good move of them. But the community, the Twitter developer community, had a big falling out with Twitter that's being discussed yesterday and today with Twitter themselves. And I think the mistake here is not the acquisition, it was the communication of the acquisition.
Right. So they had Fred Wilson, their venture capitalist, sort of float a trial balloon saying, hey, listen, you have to provide more value in the ecosystem than just something obvious like a Twitter client.
Yeah, you can't be filling holes is what he said.
Yes.
I should say, give him the benefit of the doubt. He may not have been the hitman, the lead hitman for Twitter. He may have just written it organically.
Yes.
But
no. That was, I'll tell you that I know of the inside information. That was clearly done in advance. And I know it's clearly done in advance because about 6 months ago, Evan and I were out having a drink, and he told me he was going to do this, and he sort of gave me the back channel.
Okay.
And I realized when people give me the back channel, they know that, they basically want me to float it.
Yeah.
And so I said this on This Week in Tech a couple of months ago, and I said a couple of years ago when this whole thing started, anybody who builds their entire business on somebody else's API is not building a real business.
Totally agree.
You're not really an entrepreneur. I think that there are sort of adjunct businesses that are being built to flip for $10 or $20 million.
Yep.
It's a terrible idea as an entrepreneur, unless you can build something sustainable and bigger than the ecosystem that you started in, Zynga being the perfect example.
Yeah, and so what I've said...
The Zynga brands transcend the Facebook.
Yeah, so what I've said publicly on my blog was that I believe entrepreneurs need to view things like Twitter as a distribution channel, not as a business. It's the same with iPhone. You have too many developers dependent on Apple. And you need, and Salesforce.com is my classic case, because I work there. But I think ultimately you need to view it as a channel, and if you don't have strength in other channels, you're screwed. So when I did the investment in Adley, I talked with the team. I said, from day one, I want to know we have a commitment to being multi-stream. I don't want to be dependent on Twitter.
Right. So if you're buying Kim Kardashian's tweet, you're also buying her Facebook group, her website, and X, Y, and Z other.
And all I can say is watch this space, because Adley has been working really hard over the last 3 months to become multi-stream with a lot of big announcements.
What do you think of? Because you're speaking on behalf of Adley right now as a VC.
Yeah.
I was giving some sort of information on why I invested in TweetUp and my thinking on it, where they're going to go. And Fred Wilson clearly speaking on behalf of Twitter and softening the blow to the and taking some of the heat off of Ev and Biz. What do you think is the proper relationship for a venture capitalist when speaking about a portfolio company? Because I know that any of my investors start speaking on my behalf as the CEO of Mahalo, I'm not going to be too happy about it. Where do you draw the line?
I feel like, number one, I should only be speaking on behalf of publicly available information.
Okay.
Number two, I should be speaking with knowledge, generally speaking, with knowledge and consent of the team that they're okay with me doing it. I think people trust me because I've been talking publicly for 10, 15 years, and people trust me
You're not going to screw it up.
Yeah, they trust me not to make mistakes.
Do you make mistakes sometimes when the CEO says, hey, I would have rather you didn't put that out there?
I would say I definitely make mistakes. Right?
Has that happened though?
No.
It hasn't happened yet?
Not in communications.
Okay. Hasn't happened with me either.
And by the way, when Adley first launched, we came under attack, natural from the tech press, who's averse to having anything be sullied that's supposed to be pure.
Absolutely.
And I think I was one of the firewall lines that said I put up a defense.
Yeah, you say, hey, listen, I'm going to use my credibility.
Yeah.
Calacanis is against pay-per-post.
Yeah.
Arrington's against pay-per-post. Malik, you've got this whole legion of people who are against pay-per-post, and you're going to say, you know what, I'm going to put my credibility here and say this is something a little different. And in truth, I looked at it a little differently and gave it 2 glances and said, okay, they're disclosing in the ad. It may not be for me, but I can understand. And if you gave it to charity, maybe I could understand that I wouldn't unfollow you. So that is how people use their VCs in some ways. They're sort of pawns.
I think most VCs are particularly bad at publicly talking in general.
Right.
So I think there's very few VCs who could really handle that. Fred Wilson's phenomenal.
Is that then become the value add of the VC? Or do people want to have a Fred Wilson because they know they can use him as a communication tool, as a pawn, as a blocker, whatever you want to use? I mean, sometimes it's a pawn and sometimes it's an assassin.
Let's just say a megaphone. So I remember as an entrepreneur, I would go to conferences and occasionally I would see a VC on stage talking about their portfolio company in a very positive way. And I just kept thinking, shit, why isn't my VC up there doing that?
Yeah,
right?
Where's my VC doing that?
And when I became a VC, I said, that is my job. Part of my job is to be an advocate.
Right. And so now Twitter buys Tweety.
Yeah.
They didn't buy the BlackBerry client. I'm assuming the BlackBerry client. In fact, I think I may know this. The BlackBerry client is built with RIM because RIM likes to build those clients because they can do some native things that you can't do. Like I don't know if you've in the client you'll see when you get updates to Twitter, it puts it into your inbox,
right? Like
Facebook one. So it's a sort of killer advantage. They bought one instead of building one. They could have easily built it. They have tons of money. Is that their way of showing a little bit of good faith and hey, we're going to sprinkle some cash and some equity?
I don't.
Or are they just buying a person?
Yeah. Listen, there are.
Why did they do that instead of building it?
So it's a good question. There are hole fillers, and I actually think it's not a terrible strategy, provided that you are a couple of developers, you don't have a big team, you didn't raise a lot of money, and your expectation on exit is not $50 million, right? So if your expectation is we might sell this for $2 million to Twitter, that might be a reasonable outcome for you.
Is that what you think it went for? Was the number out there?
No, not disclosed.
What do you think? It's one person company?
Sub 5.
Definitely sub 5. And probably $1 million in cash and $2 million in stock.
Yeah, and I don't know this, but that would be my guess.
How do they come to that number?
Well, I think that, there's different mechanisms. I know Oracle and Salesforce and a number of people, they try to say, how many engineers are we going to get? If we're going to get 8 engineers, we'll pay $8 million. If we're going to get 5 engineers, we'll pay $5 million. The reality is it's a bit like...
they put a bounty on each engineer's head.
It's a way of justifying price, really. At the end of the day, it's like venture capital. There's no science in it.
Right.
It's what kind of deal do we think we can get? And the reason I think they bought Tweety is probably for the engineering talent that they thought came with it.
And it's one person, right? I believe it's a one-person shop.
One-person shop, and they probably got the right price. And any good buyer will talk to 4 or 5 companies. So listen, Twitter is going to continue to build and buy and fill in holes. And if you're in that community, it doesn't mean you shouldn't develop around Twitter. You should. It's a great platform. But just be careful that you're not just a hole filler.
And the greater your success, the greater the chance your hole may get taken. If you find cheese, they may take it.
Possibly. So I think that's a good segue to Tweetphoto. Should we talk about Tweetphoto?
So our high-profile deal of the week was TweetUp. Our M&A was Adabits, which is Tweety getting bought by Twitter. So Twitter, and our third deal related funding of the week
is Tweetphoto.
Okay, so all Twitter all the time. What is Tweetphoto?
So what it is when you want to be able to put images on Twitter, and you don't just send out 140 characters, but you want a link that'll show an image, you can do that with Tweetphoto, you can do it with YFrog, you can do it with TwitPic, and a number of them. Now, that should be part of the Twitter platform, generally speaking.
And it will be.
And if you look at, for example, I played around with the TweetUp product. Not TweetUp product. I played around with Promoted Tweets, the new Twitter ad platform.
Yeah.
And I type in Starbucks, or you type in coffee,
right,
and a Starbucks ad will appear at the top of your tweet stream. And in some of them, there's a YFrog link to a photo showing a bunch of espresso. So it's a way of making Twitter as a platform multimedia, which it should be. And it's going to have video, and it's going to have images.
If you pull up my laptop here, you will see the Starbucks search, and it's in yellow. And interestingly enough, can somebody ask Tyler Crowley to get the presentation I gave at the Los Angeles some ad show where I actually built this, or Tyler built it for me. I built the same exact thing as a mock-up of what it would look at.
Click on the YFrog thing real quickly, and it'll show you an image. Obviously, you know this, and that's what I'm talking about. So that's a way.
So they're actually sending it to content and making it feel real as opposed to an ad.
Yeah.
And so so I just did this. This cost some money to Starbucks, and I see coffee beans and espresso, and I have a deeper relationship. I'm going to buy more Starbucks.
I don't necessarily want to speak to whether or not that's a good ad purchase. But
why? Why don't you want to speak to that?
Look, I don't know what they're trying to achieve.
You're not an advertising guy.
No, I've done advertising stuff. I don't know what they're trying to achieve with it. Is it brand awareness? Or are they trying to drive more people into shops? I guess when you're as big as Starbucks, it's brand awareness. So
it's definitely brand awareness.
If I click and I see that image, maybe it gives me some positive sentiment.
In this case, that tweet means nothing. But if it said, show this tweet on your phone and get a supersized.
Exactly. By the way, that's where it's going. And it's going to be a couponing platform and a location-based platform. And it is going to compete, ultimately, I think, with Gowalla and Foursquare and everybody else.
Full disclosure, I'm an investor in Gowalla.
And Tweetphoto, what concerns me about that investment, and let me talk also about a positive. What concerns me about that investment, it is a very clear hole filler. So Anthem and Canaan Partners invested in Tweetphoto.
Anthem is based here in LA.
Here in LA, yeah.
They did MySpace. Were they one of the investors in MySpace?
I don't think so, no. Redpoint did MySpace. I could be wrong, but I don't think Anthem did that. But Bill Woodward is behind Anthem, very prominent guy.
Yep, smart guy.
So I worry about being a hole filler. That said, PhotoBucket should have been a hole filler.
And that got bought?
By MySpace for, I don't know, $400 million.
Yep.
But by the way, YouTube should have been a hole filler.
Absolutely. And Google actually tried to fill the hole with Google Video, and that didn't go so well.
Yeah. So to your point, which is if you become successful, are you Swiss cheese that gets plugged? No question they come after you. But if you can out-innovate and out-execute and become big enough, and they see your success and their shit isn't working, like Google Video wasn't working, then you're a perfect takeout target. So Tweetphoto may be a good investment. I wouldn't have done it.
How much did they raise?
$2.6 million.
And this is a round?
A round, yes.
Average A round is what type of valuation?
An A round of this sort, I'm guessing it'll be, I don't have proprietary information, probably a $4 to $5 million pre-money.
Which means it's about a $7 or $8 million post-money. So for $2.6 million, the VC winds up owning 30 to 40%.
Normally 25 to 33% is the fairway.
Okay, there you go. And so we wish them luck with that deal. I don't have inside information. However, I can tell you that enclosures will be included in Twitter within this year.
Yeah.
And I think if you're doing one of these businesses, you are in a race against time, like we're saying.
Yep.
And it's sort of like bluffing. You push a bunch of money out there, $2.6 million in this case, is your bluff.
Yep.
And then you hope that your hand develops, like you're saying, so that Twitter doesn't launch its enclosures, or if they launch enclosures, you have innovations in your enclosures that work better.
Yeah.
And good luck to them with that.
I don't like the fact that they have tweet in their name, as you know. Yeah. But maybe during the fundraising process, they got a sense that Tweetphoto has a plan for expanding beyond Twitter.
Sure.
So
maybe they want to
maybe there's more there than we know publicly.
All right, moving on.
Groupon.
Groupon, a lot of buzz about Groupon.
A lot of buzz. So the buzz is that somewhere between a 1.2 to 1.3 billion-dollar pre-money valuation.
Didn't we just get through about 2 months ago discussing a $400 or $500 million valuation?
I think from memory it was around $300 million.
$300 million.
Yeah, a very large valuation, and everyone was shocked. They stepped back and like, Jesus, $25 million invested or something around that magnitude at $300 million valuation. Yeah, it's a big step up.
So 10% for $30 million or something like that. And now we're going 4x in less than 6 months.
And the rumor is it's DST again.
DST is?
Yeah, it's Digital Sky Technologies. It's the Russian money.
The Russian money that people keep talking
They
about.
They invested in Zynga. They invested in Facebook at very high valuations.
And then there was an additional story that came out that Tencent in China now was buying part of DST.
Okay.
So now you're having this international cabal buying large chunks of American companies. What is this trend? Is this dumb money? Is this money that has some vision? Is this money that can't find a place to park in the global economic disaster that is the global economy, and they're just saying, you know what, better to put this money in something that could go up, 10x or 20x than put it into treasuries that may go minus 20%. What is going on? Why is this money all of a sudden here? Is it just rich Russian people who have vision?
I suspect, and to be honest with you, I'm not an expert in it, but I suspect it is a very large pool of capital that has a view that these kind of deals are grossly undervalued and they can put large chunks to work. And the one thing that U.S. venture capital has a hard time with right now is capital constraints, because our funding sources have dried up. Our funding sources are normally universities, pension funds.
These are the limited partners, the LPs.
Yes.
These are the investors in the venture capital firms.
And they have completely dried up, and it's becoming impossible for venture capitalists to raise money. So in a
But now wait a second. You guys have all raised funds already.
Yeah.
So do the LPs not give you that money and you have it in a bank account, or do you have to do this thing called capital calls? Please explain what that means.
Yeah. So the way venture capital firms work is we raise money from limited partners. We might raise on a 3-year cycle or a 5-year cycle, and that money is legally committed to you, so you do capital calls. So it's not that we don't have money to do our existing investments. If you have a $200 million, $300 million, $400 million fund, that money's committed to you. Look, sometimes
But they don't give it to you in advance to put in your bank account.
You do a capital call.
Capital call means I go and I say, I'm investing in TweetUp.
Yeah.
I need the $1 million that you promised me, Harvard's endowment. And they say, sure, here it is.
Yep. Legal commitment to you. Now, there are occasionally defaults, and that was a big concern in 08, 09. I think
people wouldn't be able to make their capital calls.
Correct.
And if they don't make their capital calls, they lose all of their interest in the previous companies.
They lose their position in the previous companies. Now, then the question is, are you going to hold them to that? Do you want to be seen as a VC who holds them to that? So there's a little bit of
and if you hold them to
bluffing that goes on there.
And they say, we're out.
Yeah.
So you basically have to say, in the grand scheme of poker, or the chess match with your LPs as a VC, do I want to piss off my LPs? And ruin the relationship with them for all time? Do I want to give them a little bit of slack? If I give them slack, will the other LPs ask for slack and then I can never make a capital call again? Or am I so greedy that I like the previous portfolio companies and I'm willing to burn the bridge with this one LP and get their equity and I own that now?
It's interesting, Jason, because I think sometimes entrepreneurs don't feel like we have the same pressures they do. We have investors we're responsible to. They sometimes do good things, they sometimes do bad things, and we have to make these kind of decisions all the time.
Wait, do these decisions actually happen all the time? Do capital calls not happen all the time? How often does that happen?
Really only in
dire straits.
08, 09 and 01 to 02.
Correct.
Right, in really big crash periods. But listen.
So you really don't have the pressure of an entrepreneur. You've been an entrepreneur. Both sides of the table is your blog.
Yes, and I have said publicly, any VC who complains about being a VC is a big baby.
I agree. I mean, as a VC, you get to invest in 10 companies. As an entrepreneur, you've got one to make it. 10 things at bat versus one.
As a VC, you don't have quarterly sales targets. As a VC, you choose what you want to focus on. And as a VC, you can choose how hard or not to work on a variable. I mean, there's a lot of good things.
You could just set it and forget it. You could invest in a company and then not really put too much effort into it.
You could, and people do. But reputations go around. There's the funded and venture hacks and AngelList and all these things that go around. But listen, I do want to make a point, Jason, which is this: it's not so much about defaults. That wasn't the point I wanted to make. Which was, when you get to the end of your fund, if you have a $300 million fund and you've invested $200 million of it, that last $100 million is usually being reserved for follow-on investments for the previous companies. So
that's your dry powder, as they say.
It's dry powder reserved for existing portfolio companies.
The existing wars you're in.
Which means they might not do a whole lot of new investing. So you then need to go out and raise new money, and a lot of VCs are not going to be able to raise that new money.
Because of what's going on in the global crisis.
Exactly.
And DST,
And also because venture capital as an industry has underperformed relative to expectations.
Yes. The top firms have done well. The rest have done less than the stock market returns, and in some cases less than bonds have returned.
Yep.
So the VC industry, this is when they say the VC industry is in turmoil or it's got problems. That's basically what they mean. But this is a class of investment like any other class of investments that have big swings.
And it's right sizing. I mean, the VC industry is shrinking, which will make it healthier. But not to dwell on that. So either DST will be seen as mad geniuses, like I remember when Google IPO'd, and I had a lot of friends who were saying, "Oh my God, this is
$90
so stupid.
a share, $100 a share,
crazy.
Ridiculous.
This company isn't worth a few $1 billion."
And then 6x.
Wouldn't you like to get in at $10 billion? So Facebook, I remember there was a time where you could buy shares for about $1 billion.
Yep.
And again, everyone was like, "This is crazy.
I was.
$1 billion,
I couldn't believe it.
Stupid, whatever."
Yeah.
So I have friends who went and bought masses of shares. They raised money to buy masses of shares. They're looking pretty smart right now, and I think DST's Google investment's looking pretty smart.
What do you think? So DST's typical way of getting into these is they become the way for employees to move shares. They're not issuing new shares in Facebook or Groupon necessarily. We don't know, or Zynga. They're buying it from the insiders.
It may be a combination of both. I suspect it. So let's say this, okay? The history of venture capital-backed companies was you raise a bunch of money, you're in business for 6 or 7 years, and then you IPO once you've been profitable for 8 quarters, okay? And that was the history. And many companies IPO'd. In the late 90s, everybody IPO'd. You didn't need anything. You had companies doing $2 million in revenue with a market cap of $8 billion.
Yes.
Okay? So Chemdex was that example.
And a vertical exchange for trading chemicals. Chemdex, VerticalNet, and Internet Capital Group. All
Internet
the famous
Capital
ones.
Group was worth more than Goldman Sachs.
Internet Capital Group had no revenue. Was supposed to make the eBay of every single market, and it was this basic. If I can get 10% of the transactions in plastics, in chemicals, and any of these things, I'm responsible for this amount of billions of dollars, and it all got deflated very quickly.
And that was Chemdex and VerticalNet. Internet Capital Group was slightly different.
It was like an incubator, like Idea Lab.
It was a VC actually.
Ah.
And what it was is a publicly traded, what's called Evergreen Vc. And what an Evergreen VC, and it still exists by the way, and what an Evergreen VC does is normal VCs raise funds and they take those funds and when they're done, they're closed. They're called closed funds and they return the money to LPs and then they raise a new fund. An Evergreen fund makes investments, gets profit, it comes back into the fund.
Reinvest.
They continue to invest. That's what I call Evergreen.
So it's like a, what's Buffett's company?
Oh, Berkshire Hathaway.
In a way, like Berkshire Hathaway, which just keeps buying more companies and getting bigger.
Yeah,
Global
obviously there's some differences. But look, let's say this. DST will either be the mad geniuses who came in at $1 billion for a bunch of future companies that are 15, 20 billion, and that's possible. And the other possibility is it was like everyone who funded companies in 09, 00 who thought they were really smart, and then all those companies like eToys crashed.
Yes.
And everyone
got left holding the bag.
And everyone was left with their pants down. So time will tell which they are.
Yeah.
I think they've done some smart investments.
It feels like they are very good at picking winners.
Yeah.
And disproportionately rewarding the entrepreneurs in those companies. That seems to me to be the strategy.
Oh, I'm sorry. I didn't even complete this thought, Jason, which is in the past you used to IPO, and that was when founders could get some money off the table,
Right.
7 years of underpayment and salary, and suddenly you had this big capital gain. Well, it's hard to IPO companies. A lot of companies
And
are
not
10,
worth
11 years. And it is very difficult. And by the way, when you IPO, the constraints on you selling are very high. So you can IPO and still have 2 years till you can really sell your position. And M&A has dried up, not completely, but there are less buyers. I mean, there's just less big tech companies. So this is a way to potentially provide liquidity to people who have been in a business for 5, 6, 7 years, who have created tremendous value, but it takes them off the table.
Awesome. So we don't know actually what's going on there. It's just a rumor. Groupon, $1.2 billion, ridiculous valuation, and it seems to be based upon the top-level revenue, which I don't understand how people don't understand the difference, but if you sell $1 billion, let's say you sell $500 million worth of, I don't know, video cameras, and your margin on them is 2%, you've made, is that $10 million?
Not much.
Not much. And so people are starting to look at Groupon and say it's got hundreds of millions of dollars in revenue. But in fact, if you take their cost of goods out and you just look at what their net earnings are, it's actually maybe not that impressive. Or is it?
I have to admit, I haven't looked under the hood. They're reportedly rumored to be doing $1 million a day of top-line revenue.
Top line being, I sold $1 million in cameras.
Exactly.
So in that market, if they had, let's say they had a 20% margin,
Yep.
they're making $200,000 a day, which is quite impressive, which is $6 million a month, which is $72 million a year in profits.
At this stage, a strategic investor who's putting this kind of money to work is going to be thinking about EBITDA. So any investment, that's earnings, any investment that they make at $1 billion investment has some view, maybe rightly or wrongly.
Earnings before tax and blah, blah, blah.
Exactly.
So if they have $50 million in earnings, which we could probably get to with $1 million dollars a day in revenue, this would be 24 times their earnings.
Yep.
24 times their earnings.
Which is not outrageous for a
that sounds like a public
growing
company.
company.
Yeah, that sounds reasonable.
Normal ranges right now for a medium growth company might be, call it 12 to 14 times EBITDA.
So for a takeout target, double is no big deal.
And so people value a company based on EBITDA and growth.
Yes.
Right? So if you have 50 million and next year you have 60 and then 70 and then 80, that's very different than 50, 100, 150, 200.
Yes.
So those will be the factors that go into it. But
well, the first 4 deals are amazing. Let's get through some of these really quick.
Yeah. So there's Stitcher that was done. It was a $6 million Series B. What it's basically doing is user-generated, user-powered radio for mobile devices. User-powered
radio for mobile devices. I've heard of this user-powered radio many times in Web 1.0. How is this different?
So, well, what's different is it's internet radio. It is on your mobile device. Even on terrestrial radio, there's a lot of innovation going on. There's a company called Jelly, Jelli, and what they're doing, in fact, they're doing in San Francisco, I think it's on Live 105, is you can dial in a 4-hour period, and you, not dial in, you can go to the internet and vote which songs you want to be on the air. And if a group of people vote it, it gets on. And by the way, if a group of people say they hate the song, they can pull it off the air midstream.
Okay, so looking at my laptop here, we have Stitcher. I select what device I would like to use. I can pick my iPhone here, for example. I type in my phone number, or I could do my BlackBerry and type in my phone number, or download it from the App Store. And then I guess I'm streaming I wonder if I'm streaming my content or streaming from their selection of content.
My guess is that it's radio, meaning you don't own the content, and it's streamed like radio is.
Interesting. So everybody becomes a DJ. They pay some licensing fee like Pandora does.
Yep.
And maybe they can make a business out of it. Maybe they can't.
And I can tell you, because I have some knowledge of Jelly, they have massively moved the needle on, because what you do with Jelly is you go online and you drive what people listen to on terrestrial radio. So you're just listening to the normal radio, you're listening to user power radio. It's almost, imagine like Jack FM meets Total Request Live.
Okay, and Jelly is JELLI.net. Here it is on my site. My thing here, 100% user control radio. Jelly is radio democracy, putting the airwaves in the hands of listeners. You log in with Facebook, you choose a station, you vote in real time. So basically what they've done is they've actually got people to log in.
Yeah.
And wow.
And I can tell you just from my discussions with some music executives around Los Angeles that internet radio is becoming a very big business. A lot of people listening, they're monetizing it well. You have another company called Target Spot, backed by Union Square Ventures, that's built an ad network on targeting internet radio. So there's a lot of investment and innovation around radio.
Interesting.
Another deal that was done is called Tiny Spec. And I found this one particularly interesting because it's basically, it looks like an MMOG, massive multiplayer online game.
Like World of Warcraft.
World of Warcraft.
Would be the biggest.
And it's created by Stuart Butterfield, who is the co-founder of Flickr.
Yep.
I think he's the husband of Katarina Fake.
Yeah, they were, yes.
Oh, well,
I don't believe they're still together, but
I stepped in it.
Who cares?
So I don't keep up with this.
I'm pulling it up right now.
Gotcha.
I think on my screen here while he's talking.
I don't keep up with that gossip, but I will tell you this: is what interested me is that venture capitalists, and I just talked to a company today, yesterday, trying to create a game company. VCs don't like backing game companies. They like to back infrastructure, and the way they view game companies is similar to how they view Hollywood. You just don't know what's going to be.
Yeah.
You don't know what's going to be a hit, so you put $200 million into Waterworld and it's a total flop, even though you had Kevin Costner.
You put $25-50 million into Call of Duty, it becomes the greatest selling media property of all time.
But a priori, it's impossible to know. So
However,
VCs really don't like to invest in games.
This is web-based casual gaming, I think. Or massively multiplayer, web-based.
It is going to be, I presume it is going to be web-based.
And Glitch is the name of the game,
yes.
or their first game, and I just played the trailer. It looks like some weird, world where you run around and...
The trailer is bizarre. I don't even know why they
put it out there. It is very bizarre.
It adds no forward-looking view on what they do, and it doesn't get you engaged. Listen, let me say this. They raised a $5 million Series A by Axel and Andreessen Horowitz, two of the top investors in Silicon Valley.
Mark Andreessen's new venture capital firm.
Exactly, and Ben Horowitz. And you look at a guy like Stuart Butterfield, and you said it yourself earlier, they're betting on the jockey.
Yep.
And I'm sure they've seen the game, and they've tried to understand the mechanics, but they're betting on the jockey. Now, what I'm told is, before Flickr became an image sharing site, it was a video game, I'm told.
Yep.
So perhaps Stuart has been thinking about this. I don't know him, but perhaps he's been thinking about this for a long time. I found it a strange deal because I know, generally speaking, VCs don't like to do that.
Next story.
Cramster is an LA-based story.
Okay.
They just announced funding today.
Cramster.
Yeah.
Is this about cramming for your
tests? It's for students.
So that means it's a good name. If I can guess what it is, while he's talking, guys, you should check my laptop just for. And if I pull up the site that he's talking about, let's make it the rule that you would show the site. So keep talking.
Cramster is a great company founded by a guy named Rob Angarita. Very classic. There's this debate going on, Jason, now about whether you should be stealth or super public and try to be high profile and not. Rob just said, I'm solving a problem. I'm going to build a business. He raised $3 million from a high net worth individual and just started building a business. And
is this out who the high net worth individual is?
Yeah, his name is Shai Resheff. I don't know him.
What does that name sound like? Is that Resheff? It sound like Russian?
Shai is often Israeli.
Right. Okay.
So it could be some Jewish-Russian connection. I honestly don't know. But here's what I do know. I do know Rob.
I do know I love the Russians. How come the Russians haven't contacted me? Contact me. Hello. This is a message to the Russian investors.
Yeah.
We need to talk.
Yeah.
This Week in Studio is doing great.
Yeah.
Mahalo doing great.
You can take
Open
some cash
Angel
off
Forum.
the
Can
table.
I get? Listen.
Yeah.
I love Russia.
Yeah.
I love caviar. I like everything.
Yeah.
I love From Russia with Love, the James Bond film. I love all of it.
So listen.
Where are the Russians? Come to L.A.
Rob Angarita, I know very well because he was part of Launchpad LA, which is a mentorship-based organization that I've set up in LA to try and help more Los Angeles-based companies get funded and be successful and feel like they can stay in Los Angeles.
This is your version of Y Combinator.
It's very different.
Techstars.
It's more like Techstars.
Okay.
But we
why
launched
did you do it as Launchpad instead of
time as Techstars.
Is there a Techstars LA? Why not just do Techstars LA?
Well, I wanted LA to organize LA.
Okay.
So what we did is we took all the venture capitalists in town. We took a lot of successful entrepreneurs. We bring people together to mentor. And I don't feel like we necessarily need Silicon Valley or any other location to come to LA and organize
Fair
it.
enough.
So I would actually like to be affiliated with Techstars to get exchange of people and ideas. I've talked with Brad and David about it. Maybe we'll get there, maybe we won't.
Great guys.
But I want LA to organize LA. That's why I did it. But I did it before Techstars had gone multi-location and all this kind of stuff.
Good enough.
But so, by the way, this Thursday we're going to announce our next 10 companies as part of Launchpad.
So Cramster is one of these companies.
They were last year.
Okay. Again, for whoever's working the TriCaster, while he's talking, just check on my laptop, and if I pull up what he's talking about, let's sync that up, and you can just go back and forth.
So they just raised another $6 million from Primera Capital, total of $9 million. And having talked with Rob about the growth of his business, I understand why they invested.
Great.
Other deals around town, Edgecast.
Edgecast, the CDN, Mahalo's used them. They're a great company.
Yeah, they raised $10 million in a Series B.
Okay.
I think no huge innovation in the sense of, you have Akamai and Limelight. Akamai is the 800-pound gorilla. I'm not saying they're not a good, innovative network, but it is a copy of Akamai and Limelight with some innovation.
And evolution.
And I think customers want choice, and Edgecast provides that choice. And as a result, they've grown very fast. Here's what I think. I think that entire industry collapses and gets acquired by the telcos. Because it's a telco service. They ought to be providing it.
Or maybe someday Google gets into that business since they're going to be wiring 500,000 homes.
Very possible. But I will say this. I think in that collapse, I don't mean it as all these guys go away. They're all going to be acquired. So the question on Edgecast for me is, at which price did they get in, and can they exit at the right multiple?
Steamboat Ventures, of course, is Disney's venture capital firm.
Exactly.
Menlo Ventures is I'd say it's pretty, I don't know if it's blue chip, but it's a 20-year-old firm in the Valley.
Top-ish tier.
Yeah, mid-tier, top to mid-tier. I mean, it's not the elite
it's
Sequoia
not the top 5
benchmark.
Or 6. Yeah, it's not Excel benchmark Sequoia, but it's up there. Very respectable, let's
very
say
respectable.
that way.
Next story.
Another deal, Quirky. Quirky name. What caught my eye was that Jim Robinson...
RRE Ventures in New York.
Yes.
Good friend of mine.
You know him? I do know him.
Smart guy.
Very smart guy. Very good thinker. Anytime I see his name against a deal, I go look at it. Not just for the show, I go look at it because I want to know why. You know, he invested in a company called MVIA. MVIA, super interesting company that's doing transmission of money between U.S. and Mexico on mobile devices that has locked up Mexican distribution, and great entrepreneur behind that, a guy named Bill Barheit. But what caught me about Quirky was not just that Jim Robinson invested, but Chris Sacca, lowercase capital, invested.
Hey, I didn't get in on this deal.
Yeah.
I should have got in on this. So Quirky, what does it do?
So what it does is, well, I can only tell you from what I've read at the website because I didn't actually get pitched.
And here's the website.
I didn't get pitched this deal, but
So you're bitter as well.
I'm not bitter at all.
Honestly, if one of your friends does a deal and you don't get even like a call, you don't get a little bitter?
No, because I can't be invited to every single deal. I couldn't respond to them. It's a New York-based company. It's not in my exact wheelhouse of the kind of investment I do, but they've got a great team around the table. And I think it really combines 3 trends. Number one is it combines customer participation. So it's trying to get customers involved in the design process of products on behalf of brands. Number 2 is it combines mass customization.
Yes.
Right. So the idea that you can produce products for very small quantities of purchases. And so examples would be Zazzle that allows you to do that.
Yeah.
And number 3 is it combines artisan-like crafts. I think that was my impression from reading it. So it's Etsy, it's Foodsie.
It's Etsy for products. This is like Etsy meets Target.
Yeah. But the key loop for them seems to be customer participation. Come in and help us to design our products. So we call that customer development in the tech world. In the physical world, they're trying to, I think, emulate some of that. So that's why I found it interesting.
Okay, this has been an amazing show. We're at the 2 hour and 56 minute mark. Great job, Mark. Again, people can get in touch with you how?
So Twitter is msuster, M-S-U-S-T-E-R. I respond to most of those. You can write to me on my blog, Both Sides of the Table.
Yes.
And those are probably the best 2 channels.
Right.
Because email is always a cluster F.
Yes, it always is. So thank you for joining us. We did this in under 50 minutes, which is great. We got a lot of good deals in. Let us know what you think of the show. Please post comments. The show gets put on the site this weekend, I don't know, a little bit after it. If you want to help the shows, though, it's really important for you as the viewer to tweet this and to write a blog about it and to get that Google juice going and SEO going and the social media thing going. All of the shows on this Week in Network rely on you, the audience, telling us how to make them better and to socially spread them. So please, tweet, Facebook, whatever you can do to help. Email it to people who you think might do it. And please send an email, a post in the comments exactly how you think Mark Suster is doing. There's been a lot of controversy of will he become the permanent host of the show. There's a lot of VCs who are like, oh my God, how could you take Mark and not me? There's a big controversy going on. So based on the audience and your reaction to Mark, we'll figure out if he's going to be the permanent host of the show. Great job.
Great.
Rate Mark in the comments.
Great.
1 to 10.
Yeah.
Mark's mom, you can't rate him.
You're allowed to say whatever you want.
Absolutely. Well done. We'll see you next time.